Good morning, everybody. This is Mike Kearney from massrealestate.net and New Hampshire, REIA.org. This morning, I'm with Bill, the attorney CPA, talk to us about asset protection, the gold mine, the Renaissance tax strategies. I sent out an email this morning, and I've sent out postcards to you guys. Looking forward to seeing you on this. I think it's very important. But the driver, sometimes when you start something, you get reassurance from different events. Well, last week, I was speaking to a renewing member. Sometimes people are too busy to do it right and to get in there and go through all the buttons that they need to renew and pay. And so I took the call, processed his card. And afterwards, I said, like most people, I say, in fact, I do a lot of business with most of you people offline, in between meetings. And this guy, I said, how's things going? And he says, oh, generally good, but I've got a big contracting company. I use subs. One of the subs fell on the job, serious fall, split his head open. We took care of him. Then, I won't say out of nowhere, but shortly thereafter, he's faced with a $1.5 million suit. Now, I don't know how well you guys are protected. I know I've got properties, and I think they're protected, but over the years, things have changed. Just like my will, which I did over. Okay, I hadn't done the will over since my youngest daughter was born. And she's like 29 or 30 years old now. Okay, so we did the will over, the power of attorney and the healthcare proxy. And of course, we included her. And now I'm looking at all the entities that I have properties in. There's family limited partnerships, there's C Corps, there's S Corps, there's LLCs, LLPs, realty trusts. And I know in the back of my mind, I should have updated this, but especially a couple of years ago, when our best speaker in 5 years, attorney CPA, Bill, joined us. And a lot of people took advantage of that. They were there for the evening meeting. They were there for the all-day Saturday Zoom meeting. They bought his program and they've done the work, okay? I was gonna. Well, this time I'm going to. I spoke to Bill and he's walked me through some of the stuff, purchased his program, and I'm going to straighten out all my assets so that when I hear a story like the contractor, I don't have to sweat it. Now, Bill, can you tell us the basic structure of an entity? And then we'll get into a few of the tax strategies, which are great.
Sure. So, Mike, during the presentation that we'll be doing on January 31st, I'm really going to focus on the proper structure, the proper entity to have when you are a real estate investor. Okay. And what we're going to talk about is we're going to talk about how to protect your assets and how to do it from a legal standpoint. Secondarily, how to do it, what I call from a tax standpoint, meaning to give yourself the ability to pay the least taxes possible. And then thirdly, how to avoid the possibility of an IRS audit. So, we're going to talk about the proper entity structure for people who are real estate investors. And we're going to offer our program, which is solely and exclusively designed for people who are real estate investors to protect their assets. And that's what we'll be talking about on January 31st.
Okay, Bill, we've got a fair amount of contractors. Can they take advantage of this system?
So as most of the contractors I know also are real estate investors, and that's where they can take advantage of this. The actual LLC program that we offer is not covering contractors in what I'm going to say their daily job job. So that's something that I would not recommend that they use. I can certainly talk to them if they are using our LLC program about it, but that's a separate matter.
Okay, I think you'll get some good response for that. These guys are in an often litigious position, and I think it's in their best interest. Sometimes they think they're covered, but they're actually not. So that'd be good. The other thing is that Renaissance gold mine of tax strategies. I looked at that, and there's 45 chapters and then a huge appendix. And I said to my wife, Robbie, who's an enrolled agent with the IRS, I said, this is a lot of stuff. I mean, some of these strategies are pretty straightforward. Others are very sophisticated. And she said, So she said the tax code is 2,652 pages. That's the latest tax code. And that's in the email I sent out. So she said, don't you think you need 45 or more chapters? And Bill wrote them in an easy to read and easy to understand format. So.
Yeah, so during our workshop on February 4th, we'll get into some more extended information on protecting your assets. And then we'll talk about tax strategies for a real estate investor and how our Renaissance Gold Mine can help you. So some of the things that we'll educate you about during the workshop, number one is there are, what I'm going to say, nuances to how you can calculate depreciation when you're a real estate investor. And we show you first how you can maximize those depreciation deductions to dramatically reduce the taxes that you owe as a real estate investor. The next part that we'll talk about is how to work around what are called the passive activity loss limits for real estate investors by establishing a thing called real estate professional status. You know, you already mentioned contractors who quite often also do deals in real estate. They'll buy a place and they'll fix it up and they'll sell it. And if they don't have the understanding of how to avoid being perceived as a dealer, and this could occur by their accountant, aside from the IRS, they can pay double the taxes involved in their real estate deals.
Bill,
So,
that's this, excuse me, that's one of the biggest questions I get. And I think it's a non-issue if you understand it. You know, how do I avoid being taxed as a dealer?
correct. And so we'll talk during our workshop about how to position yourself as, so you're either considered an investor or a dealer, okay? And so we will talk about in our workshop how to basically set yourself up to be perceived as an investor and not a dealer. We'll also talk about how to undo being a dealer. And ultimately, we'll talk about how you can find out. The thing is, there are many accountants who will treat someone, especially someone who's buying and selling properties very frequently, they'll treat someone as a dealer, and they don't even use that word with their client. They just set them up. They report as a dealer, and the client doesn't even realize they're a dealer. So during my workshop, I'm going to talk to people about how they can ascertain whether or not their current tax provider is acting as a dealer. And, you know, so one of the things that will be available during our workshop when people buy our program is the ability for me to review up to 3 years of their prior tax returns to let them know about, could they amend their tax return and get a refund? Also let them know about the quality of the person I think doing their tax work. I'll also let them know about, having reviewed their tax returns, the strategies from the Renaissance Gold Mine that are most applicable to them to legally reduce their taxes. So I think it's a great opportunity for people who are real estate investors to learn about taxes. You know, people might get bored, oh, taxes is boring, but the thing is, if you can save 20 or 25% on your taxes each year, that gives you the ability to grow your wealth dramatically at a faster pace than most people can do. And that's what we're here to teach.
That's great. I'm looking forward to it. And this time I'm going to do it. Can I give you my credit card now and get it?
Sounds great.
Okay, Bill. Thank you very much.